Hello and welcome to Your Trader Training. My name is Phil Newton and I am your coach. What I'd like to look at on this training session is a quick overview of what we've just looked at, so that you can see a practical application of the categorization that we're talking about. As a quick reminder, I want to use around the last 200 candles or the 200 bars. Now, as I'm on the daily chart, that means that I'm looking back over the last 12 months. That's what I need to be able to make a sensible assessment. And what I'm looking for is that price is either in an uptrend, it's in a range, or that price is in a downtrend. And they're the evaluations that I'm trying to make. They're the three things that I'm trying to categorize this chart in. So for example, as we're looking at this chart, I can see that the overall theme of this chart is that it's going up, and we might consider that an uptrend. So as such, that tells me what I'm going to do next. I would like to buy the dips in an uptrend. So these are all the dips here, and we've got the rally part. So it's not yet dipping or retracing in the uptrend. If I was looking to trade this chart, I would be waiting for that retracement in an uptrend. And that's essentially what we're going through. So a practical example of going through this. So we're just going to go through some charts very, very quickly. Now that I'm looking at this chart, what's it doing? I think that it's going up. I think it's very clear that price is in an uptrend. So as such, I'd want to buy the dip in an uptrend or the retracement, and price needs to retrace in an uptrend. It's not doing that yet, so that's what I'd be waiting for if I was looking to trade this chart. Looking at the next stock on the list, I think it'd be, again, at a glance, looking at the last 12 months, I think it'd be fair to say that price is drifting sideways. There might even be a slight upward bias to this, but the price is definitely contained in a range. And as such, if price is in a range, then I'd like to see price at the lower end of the range or the upper end of the range before I would consider a trade. So now that I know how to categorize the charts, I know what I'm waiting for to happen next. And more importantly, where it needs to be. Price needs to either sell off or just rally slightly so that we're at the upper or the lower boundary of that consolidation. Let's take a look at this next chart. Again, now we're looking at the charts. It's really hard not to say that this chart is going up. It's in an uptrend. It starts all the way at the bottom left, it finishes at the top right. We've got a very clear and definitive it's going up situation. As such, I want to buy the dip in an uptrend. So I'm waiting for price to retrace before participating in the trade. Looking at this chart, we can see that price is mostly range bound. Again, over the last 12 months, price has been in a range. We've got a defined lower boundary and a defined upper boundary. Now that I know what phase of movements that this chart is doing, I'd like to see price at the lower end of the range or the upper end of the range before committing to a trade. As it's somewhere in the middle, I need to wait for price to be at one of those two locations. Looking at this next chart, we can see that price is going up. As such, I want to buy the dip in an uptrend, and it's not as of yet retracing in the uptrend. We can see there's plenty of times where price does retrace in that uptrend, and it's starting to do that now, but again, I'd like to see price retrace so that I can buy the retracement or buy the dip in an uptrend. Looking at this chart, quite possibly I would categorize this as a half and half. So this is one of those instances where it's not so obvious what's going on. The first half of the chart looks like it's going up, and the second half of the chart looks like it's range bound. So we've got two things developing here. Now, if you're a brand new trader, I'd be tempted to say, walk away, leave it alone. If you're a little bit more experienced, then you can just look at the last 6 months. Only if you're a little bit more experienced and if you've got the confidence to make that type of assessment. Most of the time, I don't do that. I'm still looking for the last 12 months of overall assessments. Now that we're looking at this chart, I think it's very clear that price is in a downtrend. As such, I'd like to sell the rally in a downtrend. We can see a couple of instances where price has rallied in the established downtrend. And again, the whole philosophy behind what we're doing is that until something new happens, the same thing is likely to continue happening. So that's why we're trying to categorize the chart. As we're looking at this chart, I think it's fair to say price is range bound. We've got a defined lower boundary and a defined upper boundary. I'd like to see price at the upper or the lower boundary, and price is closer to this upper boundary here. So it's at a good location for me to be able to make a trading decision. It's at a more preferable location. As we're looking at this chart, I think this is another example of a half and half chart. The first half is ranging. Price has moved lower, but then the second half of the chart is also range bound. Again, if you're happy with this type of assessment, you know, where we've not got a clear over the last 12-month view that price is definitively doing one thing, you know, it can be split into halves. And again, I would just like to restate that if you're more experienced, then you might like to do this. If you're not so experienced and you're not yet confident to do this, then don't worry about it. Nevertheless, the philosophy is the same. I'd like to see price at the upper boundary or the lower boundary of the consolidation in this case. And as price is at the upper boundary, maybe I'd like to be bearish. Until something new happens, the same thing is likely to continue happening, and history proves this over and over and over again. As we're looking at this chart, we can say that definitively price is going up, and I'd like to buy the retracements in an uptrend. And that's what we can see happening here. You know, price has retraced in an uptrend, so this might be a good time to consider being bullish on this stock, because it's really now difficult not to be bullish and assume that price will start to resume the well-established uptrend. As we're looking at this chart, we can see the dominant theme over the last 6 or 8 months is range bound. Again, another half and half chart. First half is going up, second half is range bound. Again, it's always the same story. When we've established what's going on, again, just using the most recent price theme, price is range bound. I'd like to see price at the upper boundary or the lower boundary before I commit to a trade. As it's somewhere in the middle, I need to wait for it to be at a more preferable location. I think we'll call this the last one. I think it's fair to say that the price chart is predominantly going down, and as such I'd like to sell the rallies in a downtrend. So price is near the lows for the moment, so I'd like to see a rally so that I can participate in the established downtrend. And this is ultimately what we're looking for. It's those several things that we can do. Price either in an uptrend, a downtrend, or price is range bound. We like to buy the dips in an uptrend, sell the rallies in a downtrend. When we've established that price is in a range, we want to be bullish at the range low and bearish at the range high. And they're essentially the 4 things that we would prefer to do. There's obviously several other ways that we can trade, but if we stick to the really obvious things to do, it means that we make less mistakes and we can not worry about the charts that don't make any sense or that are confusing or that they're not obvious. When we've got a definitive theme, or we can categorize the chart as to it going up, down or sideways, and when we can recognize that, we know exactly what to do next.